What's up, guys? Back with another video. Okay, listen up and listen good. We got to figure out what in the world are we investing in, because I'm sitting on $400,000 in cash because I cashed out a bunch of money because I thought I was going to owe it on taxes, but I actually figured out another way to pay. So I got to make sure I got my stuff. All right, so I want to put this money back in the stock market, and what I'm thinking is my original setup that I used to love was VGT, SCHD. I used to do 50-50 SCHD, VGT. I liked it because it was like non-correlating. One is all value and one is all growth. If you have consistent cash flow and you're not trading your time for money, man, you got a nice little safety net. And it's liquid. That's what I like too. And the weather can't destroy it. The weather can't corrupt it. You don't have to worry about personalities. You don't have to worry about insurance. There are some things that are beneficial to having stocks over real estate. Real estate in the long run, for cash flow, I think is the winner. But for peace, when I depending on what number I put on my peace of mind and my simplicity, for me, I start to lean towards the dividend investing. It's just a lot simpler. Man, check out that SL. I like those. I like the older ones too. You ever seen the older ones on Instagram? The ones that have the bar going across when the top's down. Please keep in mind, this is not financial advice, and I really have no clue what I'm talking about. I am literally thinking out loud. That's what this channel is. Targa. I'm just thinking out loud. So, if you guys want to think along, watch me think out loud, come along for the ride. I'm just trying to figure out what to do. You see, I'm not making this up. This is all I think about, day in and day out. It's all I've been thinking about. How to get passive income, how to have a nice life set up for my family. And that's the goal. What I love about this channel is I could make a step-by-step guide. So if something happens to me, and my wife's like, man, what did he want me to invest in? What did he want me to put the money in? You know, she already knows. She knows this stuff. But, you know, I could give like, what if I change my state of mind or something? She could be like, what was he thinking towards the end? And she watches the video. If you're watching, I love you, by the way. If something ever does happen to me, I love you guys. You're going to be all right. Everything's good. I shouldn't even say that stuff, but I like to think like that because you think that everything is just hunky-dory, but what if something does happen? Or what if you lose your job? Or we have this imaginary safety that doesn't truly exist. It's really, we're out here just trying to figure out a way to be stable. It's like a cardboard facade that everything is just so perfect and functional and you're always going to be okay. You need to try to devour your prey in the morning so you can divide your spoils in the evening. I like that parable because do it while you can, while you're young. Start stacking the cash, start banking the money, start investing. And don't go putting it all into the craziest stuff where a guy wrote me a DM and said, I lost everything in cryptocurrency. I lost it all. I have a ton of crypto, but I'm just saying don't go 100%. I mean, maybe you can go 100%. Because you know what you're doing and you're like really in it and you know for sure. But for me, I like to keep a certain portion for speculation, and I like to keep, you got to have your core holding. Ask yourself right now, what's my core holding? You know what I mean? It could be Bitcoin, it's whatever you're into, you know, but what is your core? You need to have a core holding, and then you need to have your side dish. What's the main entree? And what are your sides? That's the way you need to think of it. I think that's a safe way to do it. You make your main dish something safe, something you know is measurable, whether it's real estate, VOO, the S&P 500 that's performed year over year for years, and barely anything's beat it over a 10-year period. SCHD if you're into income, or VYM or VIG. If you're into growth, maybe you got some MGK, some VGT, some QQQ or QQQM. Maybe you're into real estate, you got some VNQ. Maybe you like growth, you got the SCHG. I just like throwing these acronyms around. Let's make this something cool rather than, I don't know, some other guy's brand we're wasting our money on and it just goes bad after a couple months. These go up in value over time. We got to switch out of the trash and get into the stash. I'm just making these things up. But you know what? Who knows what's right, what's wrong? All I know is that over time I've experienced more positive things by working hard and stacking the cash and investing than I have by spending and enjoying my life and buying fancy things. But there's so many options. Make sure you don't have overlap in your portfolio. Some people go nutty with the ETFs thinking they're diversifying. It's getting safer the more they do it. But sometimes you're just overlapping. Like, for example, you might have VUG and MGK. Go into ETF fund overlap. Just go on Google and type in ETF fund overlap. It's like a grayish screen with like bluish, grayish, like dark gray is the background. Just put in the tickers, like put in, I don't know, if you hold VOO and you're like, dude, I got VOO, but I'm going to get a bunch of QQQ. Just put it in and just see what percentage overlaps. You know what I mean? Because you might be better off having two different ETFs, or maybe just saying, I don't need this, I'll just hold the one. It's so much simpler too. When the stock market dumps, you're like, what do I dollar cost average? What do I put more into? I've got so many tickers. I was about to do it today. I was about to get some VYM because I was looking at the performance of VYM. I used to have it. So VYM is similar to SCHD. The difference is that VYM holds like 400 stocks and SCHD holds like 100 or 104. They both have pretty much the same expense ratio. It might even be identical, I don't know. And the yield of VYM is lower. The dividend growth of VYM is lower. But like year to date, the principal balance, like the investment, your initial money would have gone up like 2% more so far year to date than SCHD. So you might think like, I picked the wrong one. But maybe it's good to have both. I don't know. Put them in the fund overlap and just see how much overlap is there. Is it pointless to have you? Because it'll tell you based on like the top 10 holdings. Like VGT is like 40% Microsoft and Apple, I think. So you might hold VGT and then you're like, oh wow, it really overlaps a lot. If you have QQQ and VGT. QQQ has Amazon and Facebook and I think Google, and VGT doesn't. I might be off on that, but things like that. So check out the overlap tool because that can be helpful, so you don't have a bunch of tickers and you're just holding all the same stocks just with different ticker symbols. Just because you like stacking the different names, like you're like, I'm getting some VUG, baby, and I'm getting some MGK, and then you hit it up in the fund overlap and you're like, I got the same exact thing with two different names. So my internal battle is, do I say I am stacking for dividends, purely income, and I obsess over that and I go all in on that? The thing is, it's that damn FOMO. I could do that. It would probably be good strategy for me because I would be focused, I would know what I'm doing, and I would keep investing to increase that number. The issue is that it's the FOMO. Oh, but I held the quantum. Oh, it went up. What if I would have had it? The issue is that you gotta spray and pray if you don't want to miss out on everything. It's impossible. I gotta hold every single damn cryptocurrency. That's what happened with crypto. I'm like, every 10 minutes somebody's telling me some new one to get, and I'm like, dude, I can't spread the money around so damn much. Like Warren Buffett said, diversification is just a defense against ignorance. I might have said that wrong, but something similar to that. So if you know what you're doing, you're probably not going to be too diversified. You're going to be pretty focused on just a couple things that you truly understand and you have conviction on. So currently for me, this is my setup. I have SCHD. That's my core holding is SCHD, which is boring for someone my age. Someone my age probably should not have just all SCHD. They should be in something like VOO or something else because they're going to grow their money more. The issue is that I'm just so focused on seeing the income coming in, even with the tax drag, and watching the yield on cost over time and seeing how much money I'll have in 5 years, 10 years of income. Because for me, I'll admit it, just like everybody else, I'm in la-la land. I'm assuming Facebook ads and this is going to go on forever. They could literally I've experienced it with the iOS 14 update. They could make a change tomorrow that could crush our business. And I have an $8,000 a month mortgage. I have no car payments, but I have big insurance payments for the cars. I have an umbrella insurance policy. I have cell phones, cable, pool guy, landscaper. What else do we have? Food. Food's a major expense. Gas, maintenance on all the cars. What else is there? All I know is it adds up to like $20K a month or something. I'll be honest. It's probably almost $20K. I need $20K a month to be financially free. So I need $240,000 a year after taxes to be free. Now, I'm in a 37% tax bracket, so I need like $350K probably before taxes to be financially free. Now, if I'm getting a 3.6% dividend from SCHD, I need $10 million invested. So when you start to really run the numbers, if you want the Lambo mansion lifestyle and it's paid for passively where you don't have to trade your time for money, unless you have a business that produces cash flow and it's just based off investments and it's stocks, you're going to need a large chunk of money. Now, real estate, you can get to that number quicker, but it's more active. So I'm trying to make my side thing extremely passive. Now with real estate, I said that down here I was getting, now the houses are about 300K, but I'm getting a $300,000 house, okay, down here. Now it would be about 300,000, maybe 250. We'll say 250. And I'm getting, for example, after taxes, insurance, and everything, I'm probably getting, like after property management, all the miscellaneous vacancies. I always put 5% for vacancies. You know, CapEx stuff, capital expenditures, like any kind of maintenance, repairs, major things, saving for a roof. Now that's going to be, I'm probably going to get 15,000. We'll say 15,000. So 250,000 gives me 15,000. So 10 of those houses, 2.5 million, I'm at 150,000. So do you see? 250,000, 20 of those houses, that is now $5 million I've invested in real estate, and I'm getting about 300,000 a year in income. And due to the tax benefits of real estate, I'd say 5 million you can get to your freedom number, my freedom number, with real estate. So it's half the price, half the amount of the stocks. But you have 20 houses to manage. You have 20. It's, to be honest, if you have a good property manager, it's really not that involved. It's really not. I've rarely ever heard anything from anyone with the houses. Like, we created a system for it. When they sign the lease, also have them sign this paper that says they'll pay any fines that occur due to cars in the yard or trash cans left out, just to mitigate it, you know. Man, when I say that real estate thing, I'm like thinking, damn, maybe I should start to get back into the real estate. But that's single family. That's with no leverage. So you can go a lot further with leverage, but then things start, then it's busy again. You got mortgage payments to pay. I just don't know if I want to get back into that busy. Or I got to go, I had a UPS PO box, I still have it. And then what they do is they mail the mail to me monthly. It was like $11 a month. So I didn't have to go up there. So I would just have the mail from the PO box be mailed to me. But it was like once a month you get some stuff, you know, maybe you get like a notice from Northport about a house and then I guess the only other issues was that at the end of the year, the issue's having single family homes. That's what it is. If I could have multifamily and I could have 20 doors in one building, that's economy of scale, like this guy. You know what I mean? That's probably some big syndication, some group that built that, you know. But what I'm saying is that's what I wanted to get to a level where I could have multifamily, whether it's even just a 6-unit complex or even like a quadplex or something, which is considered residential loan-wise. So if I could find something like that, maybe I'd consider it. And I wouldn't leverage much. I would only leverage a little bit just to make the money go further. I just don't know if I feel like getting back into that, I'll be honest. I feel like so much more relaxed. I'm just enjoying my life. I never would have probably started this YouTube channel if I was doing all that, the business. Once you own it, though, it's not that involved, to be honest. The real hard part is when you're getting everything and you're going through the process and you're making the offers and you're getting the documents. Getting the loan is such a pain. Like when you have a business, it's a pain because you have to show proof of everything. So I ended up, every time I went to get the loan, I was about to close on the loan and I was like, you know what, I'm just paying cash, because I was going after cash flow. So I thought it'll be more simple. I won't have as many properties. I know it won't be as big over time as the debt is paid down. That's the thing that people don't realize with real estate. The tenant's paying down the debt. So that's another part of the internal rate of return. They're buying the property for you. You're accumulating cash flow. The property's appreciating. It's really 4 things. I forgot about that. The debt buy down. And you're getting depreciation. You can depreciate the property. So if you guys aren't familiar with depreciation, so if you take a single family home minus the land, the value of the building, and you divide it by 27.5 years. So let's just say, for example, the house is $100,000. Take that and divide it by 27.5 years. I don't know what that is. you can subtract that from the taxes. So let's just say, for example, let's just making up the math. I make $15K in income from the property, okay, in rental income, and the house, the value of the single family home is, let's say, $100,000 divided across 27 and a half years. Let's just say that's $3,000. I don't know. That's horrible math, probably. Let's just say it's $3,000 or something a year. That's $3,000 I get to subtract from the $15,000. So now I'm paying taxes on $12,000. If you're in a 37% tax bracket, it's 37 times 3,000. That's the amount of money you saved. So 37%, 3,000 times 37%. That's the amount of money you saved. If you guys can follow along with the way I'm jumping around. So depreciation with real estate's really great too. So this channel should be called Thinking Out Loud with Chris, because I talk myself into things and I talk myself out of things. And right now I'm talking myself back into real estate, because I've been thinking about how can I get back to that feeling, the feeling I had when I was in Northport and everything was paid for and the damn cash flow was coming in from the properties. That was the best feeling. Mailbox money. I know I have it a little bit with the dividend stocks. The issue is that when I'm in stocks and I say I'm a stock investor, because I'm in stocks, I'm like, I'm in dividend stocks, I'm in quantum, I'm in Bitcoin, I'm in Ethereum. But when I was in real estate, I was like, nah, I invest in real estate. And it was just one kind, and I just bought it over and over and over. And then the drip that I got from it, that was just funny money that I just bought the dividend stocks with. And whatever stocks I had, I'm like, yeah, that's just the tenant bought me those. You know what I mean? So leave some comments below. What do you think I should do? You think if I'm focused on income, if there's a real estate guy in this chat, in this video, comments, or a stock investor, I know people say sell covered calls, but I don't want to do that because I'm trading my time for money again. And it's relying on me thinking, setting it up to get the income. Even though real estate's a little bit more actively managed, as long as I have a property manager, I'm not actively managing it. The issue I have with the real estate is at the end of the year, I was doing the P&L. Maybe that's what I need to do. I need to delegate more like I do with my business with the real estate, because I have an accountant and a CPA. Maybe I need to just hand him all the paperwork. It's more of like I have to get the I'm whining. I got to go find the insurance, how much I paid for insurance. I got to print out the statement for that. I got to go. But I guess I don't. I guess I could just give him my bank statement. So what I had going on, this is the reason why it was a little complicated when I had the real estate. I had a parent LLC, and then every house had its own LLC. Well, it got to the point where it was a little annoying because I had each house in its own LLC. So what I did was I said to myself, I'm going to put 2 homes in one LLC. This is more for asset protection, but I thought I'm going to put up to 2 homes in one just to simplify it. But then it didn't simplify it. So you know what happened? I had a bank account for each LLC. And in the bank account, I had 2 homes. So I had like landscaping being done. I had repairs and taxes and insurance. But in the statement, I didn't know which house it was for. It really was a dumb move. So really what you should do is you should have like a property management company. That's the main LLC that owns those houses that are like dormant cells. Those LLCs, they don't have an EIN number, but the main one does. The main one has a bank account. So you have one bank account. All the cash flow goes into that bank account and all the expenses come out of it. And then you operate it as a business, like the one account and all the income and all the expenses. I'm pretty sure that's the way to do it. If anybody in the chat knows and they're really into it, let me know, because if I could structure it in a more simplified way, I probably would consider getting back into real estate. The other downside about the real estate down here is like look at that aquarium they're building. Dude, half those panels got ripped off during that storm. They're just going back and getting everything back to normal again. But I remember when that storm hit, those couple storms that came through here, I remember thinking, thank God I don't have those houses. I thought, oh, you couldn't pay me to have those rentals right now. My property manager couldn't even get around to get all the hurricane shutters on all the houses. I would have been down there with an impact gun with an electric gun trying to get the shutters on. The storm's coming. I got to get my family set up and I got to take care of us and get fuel. And I thought that to myself. I thought, real estate's amazing, but down here, there's so many variables that make it kind of not that appealing. So again, I'm just thinking out loud. Don't think I'm a weirdo. If you want to watch me, watch. If you want to listen to my thoughts, listen along, because I love you guys watching. I appreciate everybody. But some people might say, like, this guy is just going on and on and on. One guy really like, listen to your speech patterns. You're this or that. I'm like, I don't know what I am, dude. I'm just thinking out loud. If I wasn't on the phone and I was just driving, I would just be thinking the things I'm saying. I'd be thinking, should I get back into real estate? I don't know. So subscribe to the channel, guys. I'm about to go into this Barnes & Noble and turn these ads up. I'm getting dialed in. I've got a new strategy, and I'm going to tell you guys about it once I check it out and see if it works. So basically what it is I'm getting off a triple. I'm not getting off a triple whale. I'm not using triple whale to make decisions anymore. I'm just using it for insight, because I've caused a lot of problems with the business with this damn triple whale. Knowing too much about the numbers. I'm getting too nerdy with the numbers, and it's setting me back. So subscribe to the channel. I'll see you guys on the next video. Let's go.